Bam, we're live.
Love it.
Good morning.
How are you this morning?
Good. Been up for 6 hours already. Just
Did you pull another all-nighter or what?
no, not pulling all nighter. I just been getting up early to pound out, keep working on the software. It's the only uninterrupted time to just keep tweaking and tweaking
Yeah.
and whenever I'm in content creation mode, that's kind of how it works. But all good. But been a
No,
while since I know you've been did a number of cohorts recently. How's that been going?
yeah, it's pretty good, right? We knocked one out last week, right? And now we're stepping into, we kind of have two reset periods throughout the year. We kind of treat June as a reset, right? Just a chance for us just to kind of take a step back to see if there's any emerging tools or content that we need to focus on, right, for members. And then we usually get another one of those towards the end of the year, like in December, right? So just kind of gives us an opportunity to, not focus just on, members, although we always kind of focus on our members. But this is, specifically to focus on content development, a lot of the stuff that you're articulating. That takes time, right? I mean, that does not just happen, right? One of the things that I've been working on, and I need to reach out to our virtual admin assistant, Kelly, and see if I can get some help from her is, um, we spend a lot of time just for our members. In fact, I've got one here. I'll just kind of pull up, you know, um, we build a lot of content, if you will, content creation, right? In the form of binders, right?
Mm-hmm.
And it's got a lot of our messages in here, and place for notes and everything else. And you would not think so, Scott, but not only is there a cost associated with that, but you'll chuckle. Once a year I grab my wife Michelle and my daughter, and we all go down to the office at Town Center, and we're going to build binders for the whole year, right? And we'll take a weekend, sometimes longer than that, and you're printing these things out, and you're sorting them, and you're punching hole, you're putting this thing together. And so not only is there a lot of time involved in that, right, but there's a cost associated with that too. And
Sure.
so we've reached a point where I've found a company, printing company in the middle of Iowa, who prints, material like this. And we're in the early stages of trying that, right? We're going to, it's a spiral bound kind of thing. And so we want to keep the quality high. We want to, obviously the content needs to be there, but not only does the cost end up being less for us, but it is a time saver, right? It's a huge time saver where you can just, hey, I just need to order 120 of these things for the year, and then away we go. Now, we have talked about it because we do make changes to our content periodically. So if we came out with a mid-year content update, maybe now we're just updating content once a year, or maybe we only order enough for half a year at a time, make any update changes and go. But it's like any big operation, there is efficiencies in scale. So if you order a lot, your price goes down, right?
Right, right.
We've got to balance that. But I think it's going to be a huge time saver. I think the product, we're going to ultimately be happy with it. And but we are spending a lot of time. You have to build a mock-up for this company, and all of those graphics and all of the content and file size and everything has to be totally squared away. But we're almost there, so I can just shoot it to them and just say, print me a sample, if you will, or hey, let's go to production, right? Let's do this. So we're excited.
No, good. Well, I'm glad you're taking that step. That's kind of what I wanted to talk about today was the
Yeah,
steps we've been taking from a content, because we've done the book thing, the printed book. You can get it on Amazon, but usually I just make it available,
right.
downloadable on the website. But updating that, it takes a lot of effort and time, and the story's still the same. So we
Yeah,
have we have
and at the end of the day, why are people coming to see you? Why are they coming to see me? Is it the quality of the printed product that we have? I mean,
yeah.
maybe, right? It's certainly, we take pride in what we build. The fact of the matter is, they're coming to us for your insight, right? For the connections, for the wisdom that you've gained over 15, 18 years in doing this, right? I mean, a little bit, we don't want to lose sight of that. That's why people are coming to us, even though I take pride in the products that we build, right? We want them to look nice. So we want them to look professional. And that's important.
Yeah.
It is, but at the end of the day, I don't think that's why people are seeking us out.
No, exactly. They want an easy button.
Yeah.
It's like, how do you make me more money? How do you save me time? How do you reduce my stress? Or how do you help me lose weight? Those are the human desires are typically,
Yeah.
what people are after, right? And so I've always been trying to find ways to explain, help people make the survivor benefit plan decision more efficiently, more confidently, so they're not stressing out about it, knowing
Right.
that of all the priorities, when you're retiring out of the military, while the SBP decision should be a higher priority, the way it's presented, the timing it's typically learned about,
Hmm.
the knowledge of the alternative options, what to do instead. There's a limited time frame to kind of make the decisions. It gets shoved down on the priority list, and we're talking hundreds of thousands of dollars of
Sure.
either this way or that way.
Yeah, absolutely.
And so it is a meaningful decision. And my goal has always been to make it easier, and yet I can't change when somebody shows up to ask the question. Hey, I got a month until I got to make this decision. I got to explain it to my spouse.
Yeah.
It's going to be different for everyone. And at the
Panic
end,
stricken conversations, right? Hey,
right.
I got to do this.
So that's why I wrote the books, do the videos, have the website, and put all the content out there. And some people dive in a lot and
Hmm.
get fully educated and really like understanding it. But I can't make everybody an expert in life insurance overnight. And really, what it comes down to is what are the numbers? And till now, we've always been limited to what calculators are available on the government websites or spreadsheets we build out, and then of course the life insurance
Sure.
illustrations. If you want to look at alternative, what's it going? How am I going to have to design this? How much money do I redirect here? Where is it going to come from? And I get it's a lot to wrap your head around. So I've always
Yours
wanted.
has always been a little bit of and not a little bit, but in large part, a math problem, right? I mean,
Yeah,
it's
yeah.
always
I mean,
been, hey, let's look
it
at the numbers. What does it look like, right?
right, and these are technically advanced financial strategies,
Yeah,
understanding using life insurance as a wealth management tool, not just a death benefit, because that's the whole point of replacing SBP. You've earned this pension to be a stream of income from having served in the military.
right.
It is an asset. It is a portion of your wealth. And if you don't like the government protection, again, I always say, hey, that's your decision. I just want to help you analyze
Yep.
it, answer your questions. But if you don't like it, then just throwing the money at the stock market isn't necessarily the best way to do it. It's one way to do it, but it just puts it at risk. It doesn't have a death benefit component, and it doesn't have a
Right.
bunch of other whiz bang, features and benefits along with it. So we try to educate on the advanced life insurance strategies. You can go on any life insurance website, USA, and get a term quote. We do term
Hmm.
insurance too, but that's the easy button, and it doesn't solve the survivor benefit plan problem because you're going to outlive the term. And sure,
Hmm.
it's cheaper, but the whole point is not to just do it cheaper, it's to do it better. So this
Right.
isn't necessarily, SBP seems like it costs a lot. Well, yeah, it costs a lot because we're paying the same price for everybody. You're not getting rewarded for your health. You're not going through a process. It is the
Yeah.
easy button. So for those who want to, manage their assets, their pension is an asset. There's a more efficient way to do it, but again, it takes some understanding and crunching of numbers and qualification
Yeah.
and a little bit of effort. Just like buying a house, you don't just get to walk in and say, all
Yep.
right, I want this house. You got to check the neighborhood. You got to find a realtor. You got to get qualified for a mortgage. And then you got to decide, do you even want the thing, right? So
So what are some of these
similar
tools? I know
processes here.
you've been online, right? AI's played a big part of this, right, in helping you,
Yeah,
just
that,
a lot of this. So what are some of the things that that you've been dabbling in?
So what I'm gonna do is preview the whole tool I build out, and yeah, thank goodness for AI. It's allowed me to finally, build out. Hold on one second. To build out this program.
Yeah, while you're pulling that up, right? I mean, and this has, and just for the listeners out there this morning, this has been, you've been working this for a while, right? I mean, this
Yeah,
hasn't
this
just
is
happened overnight,
right.
right?
This is what I've spent the last few months on.
Oh my gosh, it even looks different, Scott, than last time you and I sat and looked at it. So
Yeah, great. And that's what I've been doing is trying to tweak it to make it more useful. My whole goal here was to not just build a calculator, but to build an education tool alongside it so someone could have a consultative process on their own as they're going through this. Obviously, um, with the understanding that you get on a call with me or someone on my team, and we'll use this as a supporting tool to have the conversation, ask additional questions, because I've put a lot in here, to use it as much as you want. That's what I always said about my books. Read as much as you want, as you find useful, and then come and ask us questions as needed, because at some point you gotta, when it comes down to life insurance, you have to have the one-on-one conversation to go through the process. Um, but what I thought we do today is just go through the tool. I'm just
yeah,
going to show you what I built out so far and
so
kind of how it
scroll back up.
works.
Let me look at the header here real quick. So it's your SBP analysis tool. Look, pretty intuitive, right? So if I'm a user, I can just start here. It's one decision, one deadline, no doers, right? And again, your call out, right? SBP, your choice, right? The choice and whether to do it or not could be the most expensive. Yeah, check the box of your life, no doubt, right? I mean, this is a big decision, and it's, very rarely in a lot of these decisions are there, one-way doors. But I would make the argument that SBP for senior leaders, as you're stepping out of service, this is kind of a one-way door. And so what do I mean by that? And I'm interested if you see it that way too, Scott, because if you take it and you're in. If you don't take it, you're out, and it's hard. In fact, arguably, you can't get back in unless there is an open window. I know they've done that in years past, right? To
Yeah, they did it in
buy you an on ramp,
2023.
but you've got to buy in. It costs you, right, a
Right.
lot to buy back into it. So I do kind of think it's more of a one way door, right? So you got to look
Yeah.
at it.
There is a small window between year 2 and 3 to opt out if you have opted in, but unless you have a major change of circumstance,
Right.
divorce, death, you're in it. Once it's just a function of your pension. So,
No, it's a
is
really
is what it
important
is.
decision. Yeah.
But this was designed in 1972, and really the structure of it has not been changed since then. So there's been a lot of innovation since the 70s,
Wow. Yeah. Talk
and
about a legacy tool that's been around, right?
yeah,
And um,
and other
you
than the BRS change, but see now that's a whole nother wrinkle that's going to come in for the people that are going to be in the blended retirement system. They're simply just getting less of that than the CRS system got.
so it's interesting. I was at a meeting earlier this morning with some friends, and we were talking. Like I forget the exact year. Maybe it was 2015, 2016, 2017. Right? There was a high three retirement scheme, right? In other words, you looked at your last 3 years, and that's kind of what your retirement pay was based on. I think people retiring out of service today, I think it's a 40% um, target for those individuals. That's what they figure out their retirement on. And I'm not sure if that affects SBP or not. I
It
know
just
SBP is an expensive option, right? And depending on how senior you are, it could be $500-600 a month that you're going to pay into this program.
and that's what our calculators show us. It's just, it's 6.5%,
Yeah.
whatever your pension ends up being, however they calculate it, if they change it or not. It's a 6.5% cost of the pension. So
So walk me through the tool. So what is that up front? Like,
what we have here is just standard input. So you put in your age and your life expectancy, and that's going to pull from the DoD actuarial data
okay.
to determine probabilities. And then whatever your pension is going to be determines the cost. And then you can choose to adjust the inflation amount
Yeah,
if you choose. Now, the standard DoD calculators use 2.5%, so we just leave it at that. But if you want to project that they might increase COLA rates,
got it.
it's
Okay.
just going to make all the numbers go up. But kind of looking at our standard, '06 with 28 years or so,
So
retiring
that
around age
that
50.
member age figure, Scott, is that's the member's age at retirement? Is that correct? I mean,
Yeah, that's kind of where we're
okay,
ballparking it, right?
okay,
And then, ballpark, what a pension's going to look like, put $7,800 and, you know, do a calculation. And
calculation. Okay,
what this brings us to is I built it out with a summary and a detailed analysis page, for people who want to kind of just
nice.
look at the numbers in one big page. But we'll come back to the presentation mode. But just, real quick, look at the numbers. That's a little under $100,000 a year based on that monthly payment.
Right.
And we'll look at all this in more detail with this presentation mode. So the idea here is, again, to educate while you're analyzing your numbers. So, and I've tried to condense it as much as possible into tabs and sections and stuff, but there's going to be a little bit of scrolling. It should be mobile friendly, but I haven't even checked it on that yet. But
So the first thing here I'm looking at, that's a graph, that's a bar graph, and that's showing how much my annual pension is, right?
yeah,
Based
this
on
is
the retirement figure we had.
right. So this is just showing year one, without before we start adding colas and all that kind of stuff, what's it all worth?
Okay.
And then, if you got hit by a bus in year one, how much would your spouse get? So 55%. So you're paying 6K to maybe get 50K in that scenario, right? And so that just goes on year to year for 30 years as the way SBP works. And so
Okay.
that's why I put the key questions over here. So as you're going through all this, what do you want to be thinking about? And I've got a lot of other prompts of questions to be considering, and some may or may not be relevant. But the main thing people are thinking about is, well, what happens if my spouse passes away first? Well, that
Hmm.
6K added up over 30 years um, doesn't come back to you. So that's
That's a
the
sunk
main thing.
cost. You
Sunk
lose it,
cost,
right?
right?
Yeah.
Do I need access to the money while living? Well, that basically means, all right, if I was
You
investing
borrow against it. Yeah.
right, and so if I was putting 6K a year elsewhere, that would add up over time plus interest, and of course, there is no equity to the survivor benefit plan, so that's a concern a lot of people have.
It seems like an attribute of a very dated program, right? You made mention this is from like
What
1970s, right?
I mean, there's a little bit of that. It's also just how pensions work.
Yeah,
All pensions have a survivor benefit plan. It's just, again, it's just like, does my company offer health care? It's like, do I even want their health care? It's like, well, that's just
right,
part of the system.
right.
So that's, and we get, it's got the word benefit in it. So the assumption is, oh, it's a benefit, therefore I must take the benefit. Well, all benefits are not beneficial to
Sure.
everyone. They're a mass, it's just kind of, lump it into everybody. Well, are you everyone? You're getting out of the military. You're an individual. Your situation is uniquely different,
Yeah.
specifically for senior officers and
Yeah.
NCOs who are going to be earning, pretty good income on the outside. You're not the average. And these are for averages, right?
So not only
So,
do you have key questions on the right there, what's your first block underneath the bar graph? What
yeah.
I'm
So these sections are
yeah.
about, all right, so what is my pension worth? What would I have to have in the bank on day one? If I were going to do 93K a year starting at age 50 for the rest of my life,
Mm.
I need
So
to
like
have,
what lump sum of money would give you an annuity, right, to match
right,
your pension? Yeah. So
exactly. And
so
then
you're saying that's
likewise,
what, $2.5 million for you to grab 93,000 a year or something like that?
exactly. And there's a little
Wow.
explainer down here that goes into that in more detail. But SBP, we know, only gives you the option of up to 55% of coverage. So the equivalent of that, about 1.4 million in this scenario, right? So why this matters is, one, SBP only pays out on the monthly basis. So you're only getting a monthly paycheck, and the spouse is only getting that monthly paycheck. Would a lump sum amount be more attractive? If you did get hit by a bus at age 51,
Give it
would
all to
you
me.
would you rather the spouse get, 3 grand a month or 1.4 million lump sum? That's where a life
Right.
insurance death benefit is different. Or do you want to protect the full value of the pension rather than just 55%? Well, that's just a function of qualifying and purchasing
Right.
more life insurance, right? You at least now have that option on the private marketplace. But the main thing is with the COLA adjustment, because with that 2.5%, your pension's going up, but so is the SBP cost. If you don't opt out and you don't opt out during that window, you're paying it for 30 years. So that 30-year cost adds up. Again, a few $100,000 in this scenario,
Sure.
267. You know, could that money invested elsewhere with a little bit of interest built some equity and become accessible? Would that be an advantage to you and your plan? So that's what we'll illustrate in more detail in other sections here. But the main thing is, the main question I think that people are overlooking is just the fact of, if you're in better than average health and you can qualify for a better rate, then you're going to be able to do all this more efficiently. Just from a cost perspective, let alone the ability to build equity, choose your death benefit, choose
Sure.
your funding plan,
Yeah.
where everything with SBP is fixed, right? And of course, if the spouse does pass away first, would you like to change the beneficiary rather than it just going away to still leave a benefit to somebody
Yeah, right now you
somewhere?
don't have that option, right? That's SBP. If spouse
Exactly.
dies, right, you can't roll it to anybody else. Okay.
Right.
It's a nice tool, Scott. You've done some good work on this.
Oh, we're just getting started. I've got two
Man,
different sections. We'll probably only go through the first half of the tool today,
sure.
but um, we go into the next step here, just a little more in depth look at those costs. Um, over time, adds up. This is just accounting for the COLA, so that's where we see that 30-year payment. Um, but even at a 20-year milestone, you've already put in 150K into it. It's like, well, if you're
Mm,
retiring at 50, um, and you want to start drawing income at 65 or something, that could have been otherwise been an asset
sure.
that you draw from, right? So,
Well, you've said this before, and I kind of chuckle. You said, "Hey, what it is in the title, right? It is a survivor benefit, right?
right.
Meaning in the title, somebody,
Yeah.
you
There's
know,
only a benefit if there's a survivor. That means
exactly.
you're dead.
Yeah.
You're not getting anything out of it.
So there's
So it's
no means to recoup anything. This is
right,
just,
right.
you're putting it in there, and if there's a survivor, somebody, yeah,
Yeah. So
you're
what we're obviously talking about, and part of this calculator introduces our war chest strategy as an alternative, and our idea here is, using cash value life insurance in combination with term insurance. you can build equity and have death benefit protection. And if you were going to put 155K away into SBP, and instead we put it into an interest-bearing account, maybe you double that money and have an equity component.
Sure.
And if you don't touch it, obviously it keeps growing, and you got a lot more to pass on than just a monthly payment to a spouse that goes away
And
upon
it's
the
so
spouse's death.
it's filled full of options. In many instances, you may be able to borrow against it. You may be able to tap into it for a period of time and then pay it back with no penalty. Like there's all kinds of things you can do with it, right?
Right.
Um,
But we'll get into that later on the next episode. But looking at kind of more as people are thinking about making the SBP decision and trying to understand what the various scenarios are, ultimately it comes down to who dies when. So we've got a section here that kind of goes into that a little bit more detail. The main thing is the break-even point. How long would the spouse have to survive the retiree? And this is the most likely scenario, just to get the money back. So as long as the spouse survives by 5 years, you're getting your money back. But again, we looked at the value of the SPP. It was 1.3 million. So how long would they have to survive to get 1.3 back? That's more like 20 years. So
yeah,
either way, and that's what this is. The best case scenario is retiree passes away early, which isn't really a best case, right? And so
well,
that's where
it's an
you'd get the
unfortunate
most money.
circumstance, but that's where the program would pay the most,
Right.
right?
So we highlight that, and of course, the worst case scenario is spouse dies first. We don't get anything back. So we show these in a little bit more detail, and even those specific probabilities. This is the one I'm talking about, saying what's the probability? And again, this is pulled directly from the DoD Office of the Actuary Mortality Tables,
Right.
and calculated. And so there's that scenario. To get the full value of the SBP, spouse has got to survive by 20 years. So 15%
This is an
probability
amazing
on that.
tool where you visually depict all this. Let me ask you another question that just kind of came to my mind. In fairness, Scott, like SBP, is that a good option for somebody? And if the answer to that is yes, what does that somebody look like? I mean, would it be somebody who
Sure.
was not in good health, who was uninsurable? I mean, is that where this
Yeah.
program would really benefit somebody? Is that
Oh, of
what
course.
you're looking at?
I think, I never bash SBP. It's a great backup plan, right? And the only way to know, see, most people are thinking about trying to make the SBP decision and wrap their head and getting stuck and trying to figure out, is it going to be good for me? What's the chance of this year? And they're trying to project out all these possibilities.
Yeah.
And the only concrete thing is to know, all right, do you qualify for something better? Then, if you don't, take the
Yeah.
SBP,
Yeah. It's a
right?
good plan B, right? To go.
Or if you're 15 years older than your spouse and you might qualify, but maybe you're not in the best health and your spouse is way younger, or you got super young children, and it's
Yeah.
not going to cost you a whole lot. If it's not going to, $500 a month, sure, that's a lot. But when you're getting your pension, your VA disability, second income, it's not really moving the needle. So
Right.
we acknowledge that it's better to put it elsewhere if it's not efficient for you. But if your spouse is 15 years younger, yeah, throw $500 at SBP. But again, is that coverage enough?
Right. Right.
So you probably want to do a little bit of both if you can.
Sure.
Right. So after life expectancy scenarios, we just highlight, what SBP cannot do. Again, no living benefits. So
Yep.
either use it or lose it. And using it means
Yeah.
you're dead.
Yeah.
No way to pass it on beyond a spouse. And then no flexibility in choosing how you fund it, how long you fund it, or changing the amount of benefit you want coverage on.
It's a pretty rigid program, really.
Right.
So
this is, you got to make your decision at retirement, and you get one chance to opt out between the 24th and 36th month. But after that, it's locked in again, unless they do an open season window, which they did in 2023, which everybody just got a letter in the mail and we're wondering, what do I do about this?
Mm-hmm.
And some people were considering opting in and then being told they got to pay $100,000 just to opt back in, and then the ones who wanted to opt
Right.
out, they didn't get any money back, right?
Yeah.
Okay.
So,
So
I mean, just so I'm clear, if I was in the program for 6 or 7 years and I wanted to quit, I wanted to get out of it. I mean, I could do that, correct? Like I could stop paying into it and I could leave the program. I'm just getting no benefit at all. I'm not recouping any cost, anything. I'm
no,
walking away from it.
no, you can't get out of SPP unless there's
So
you're saying if there's an open window?
I'm saying to exit. I'm not saying to get back. I'm not saying to get into SPP. Like
No, you can't
once
cancel.
so it automatically comes out of my retirement pay and I don't have a say so. I'm locked into it.
Correct.
I think there was maybe a time where I knew that, but it's hitting me a little bit hard right now. Wow, I am totally locked into that. So the DOD is going to garner my retirement pay whether I decide I want to do it or not. I mean, and think about this. So what happens, Scott, if I'm an individual, I get into SBP, um, and now maybe who knows what happens in life, right? Maybe you're divorced, maybe you're not,
Yeah,
you're not.
situations change in divorce,
Yeah,
or when in that case it comes down to, I've never seen a divorce go the same way.
yeah,
Sometimes sometimes the spouse chooses to keep paying it and then they pay it. Other times it's somehow in the divorce decree there's a requirement to buy a life insurance. It also depends on whether or not the spouse gets remarried. So
yeah, there's a lot of
like
other
every
factors.
like all divorces, it complicates things.
Yeah,
But
sure. No, I'm
that's
sure.
essentially, major life change situation is the only other time that you would potentially
Yeah.
can't be able to cancel SBP.
No,
But
it's
then
something to
you're
look at, right? This is a great tool you've put together, right? To kind of cover all these contingencies. So,
Yeah. So, next step here in our presentation mode is just saying, all right, well, what if we could do something else?
hmm
Get the protection, but also have access to your money. So,
hmm
and that's where our private life insurance solution, we call it the war chest strategy,
hmm
is, the ability to, throw money in your war chest. If something happens to you, there's protection, but the war chest itself is also protected. It's an investable asset that that
hmm
that grows based on market indexes, but it's also insured. There's no risk of loss on those, so it's not in the stock market, so you don't have to worry about risk of losing. And but then there's so it's protected, but if you want it or need it, you can open up the war chest and pull the money out and
Right.
use it while you're living. So here we just kind of talk about some of the problems people have when they come to us and say what they don't like about SPP, or why they don't like it about it for them. Here's how we're able to offer an alternative with the war chest strategy to do that. And so, access to money while
Sure.
living, flexibility to choose how you make your premium payments and how long. If you want to pay up earlier, there's options to do that.
Okay.
The ability to change beneficiaries at any time is a
Flexibility in
key
the
feature.
program. Yeah.
And the main thing I think is important is health. If you can qualify for better rates, and most people do, then you're going to have just internal cost savings. And what that means is the cash value component just grows better. Either way, SPP cost is the same price for everyone in the military because you're paying for people who can't otherwise qualify. So if you're
Right.
healthy, you're paying higher rates just internally, right?
Right.
And then the fact that SPP, you don't have the option to cancel. What we like about the war chest, there's an alternative exit strategy. You can always later in life say, "Hey, I don't want this anymore."
Right.
Cancel it, take your money back, and be done with it, right?
Okay.
So,
Sure.
so this is one of our education sections. Um, get into more detail the types of products we use: term insurance and permanent life insurance. We use typically the index universal chassis. There's different types of permanent insurance. Whole life insurance is one people are more commonly aware of.
Right.
Good, bad, and ugly. This is where there's a lot of dogma out there about life insurance as an investment. It's like, well, it's not meant to be your retirement savings vehicle. We're using it here in the context of replacing SBP. So in that vein, we want to understand what it can and can't do for us.
Sure.
Index Universal Life has properties that no other financial vehicle out there, has. And so that's what we like as an advantage as an SBP replacement. However, we don't typically only use the Index Universal Life because to buy a lot of death benefit of permanent coverage means you got to put a lot more money into it. And that's kind of the stickler with whole life is people feel stuck in their whole life policy, much like they're stuck in a mortgage or stuck in the SBP. So we use term insurance to cover the short term, the low risk scenario costs to buy a lot of death benefit at lower rates, right? So that way you have options to choose. How much death benefit do I want to keep and for how long? And so the strategy is designed to move with you and be flexible over time. Early years is high risk but low probability of death. So yeah, you want to have a huge death benefit because if something did happen, you want to pass a lot on to your spouse and family.
Mm-hmm.
But the ability to build assets over time is where permanent insurance comes in, because permanent insurance needs the equity, just like your mortgage. You got to build the equity to help pay off the mortgage, right? That's because permanent insurance is going to be there. You could live to 120 and the insurance company's still on the hook. So that's why the equity, helps manage the cost.
Yeah.
But the ability to then use that money is what makes it unique. Just like with a house, you could live in it forever. You could sell it for a profit. You could leave and rent it out and make profit that way. And so, having that flexibility of an exit strategy is key. And so we go into each one of these in more detail. People will be able to click through and kind of decide, hey,
pretty involved tools, Scott, you got here. This is pretty amazing.
We just want to, again, it's an education tool, so people can, different aspects of it are important or for different people, right? So this just gives you the full flexibility to understand, because again, these are advanced, it's almost like estate planning.
Yeah.
It's just, it takes planning, it takes understanding of, what's even possible, right? To be able to use it. And then on this last page here, we have a quick one-shot scenario where we just do the same amount that would have gone into SBP. What if, without making any other adjustments, we threw that into the war chest strategy and got a mix of term insurance and permanent insurance, and that's to cover the SBP coverage. So 1.5 million of coverage is about what the SBP was. Same cost going in over 30 years. I'll show that here. So paying up till age 30. But then we see this green line, the cash value is accumulating. By that 30-year mark, we've already got almost 250,000 in cash value, which could be usable. You also notice the death benefit drops, and that's just simply indicating that the term ended. Term ended at age 70.
Mm-hmm.
All the way up until that point, we have this orange line represents the term coverage. Oh, I see. It's split up there in the hover box. And so in this scenario, we're showing, here, let me go to the initial year. In the first year, we get 250 of the permanent coverage and 1.25 of the term coverage. And that helps us manage costs. So total death benefit of 1.5 to cover SBP in the early years. But now we've got 20 years to decide, do we want to even keep that full death benefit?
Mm-hmm.
That's where the cost is, right? Cost is always in the death benefit. So if you decide later on you don't need it, then you can let the term expire and just allow the death benefit on the permanent insurance to keep growing, and then based on the cash value. So, but you also have the ability to convert the term to permanent without new underwriting. So if you decide you want to keep some or all of the death benefit, you have that choice. So again, more flexibility than with the SBP. So we like showing that, and just showing kind of, all right, crunching the numbers, side by side comparison. What's that look
Yeah.
like? Um, same money going in, and actually in our scenario, we're showing less going in because we're not doing a COLA adjustment. It's the same 507 a month for 30 years, right? So putting in less money and coming out with more benefit, right?
Mm-hmm.
The main thing being, what's the probability of getting your money back? Either way, with the war chest, somebody's getting something back. So
Yeah.
there's always the ability to recoup benefits.
Well, that's a
Where
big part of it, right?
right.
It's somebody's, like you said, there is some return on your investment.
So I got more detail here on kind of how that works. I'm still building this out a little bit more, but
I like it, Scott.
wanted to preview. Now this is just the SBP analysis and kind of quick comparison tool.
Right.
What I've also got is, all right, you want to build out a strategy now. This would probably be done more on one-on-one with me,
Mm-hmm.
but I've got a whole nother tool here to really dive into customizing. If we knew we were paying this amount into SBP over here on the left, what are some different ways to design the war chest? So I'll not go. We've gone through a lot already, so I'll not go through this right now, but just want to preview. This is meant to be the ultimate, SBP alternative slash, you know, insurance wealth building, illustration tool to show
Well,
people the
it
concepts and
is
to
a
educate
great
around it.
tool that illustrates a lot of the questions that I think people are likely going to have, right? So let me ask you this, Scott. How do people access this? Is this something they have to reach out to you and contact you and you would walk them through this, or?
Well, I'm going to put it on the website and make it available for anybody to log in and play with
And
it
it's there,
themselves
huh?
and do
Yeah.
get their own numbers and hopefully have a download option where they can here's what to go talk to your spouse about, or obviously you can sit through this
Okay.
with your spouse. So going to allow people to use it straight from the website. Right now, I'm looking for beta testers to test it out. So it's
Oh,
not on the
wow.
website quite yet. Hopefully get it up there soon. But if anybody wants to get early access and play around with it, I would love to
Yeah.
have you do that and get your thoughts on it. But
No,
we're
that's
gonna.
fantastic. Yeah. No,
But
I think a really helpful tool to assist individuals, who are stepping into this as they approach their transition or career progression. Right. This is
yeah,
one of the big decisions that come out, and most of the time, not always, but most of the time, it surprises members that they are at this point and they have to make this decision, right?
yeah,
And you're giving them a tool here to understand it, to plan accordingly, to develop a strategy so that they're not caught flat-footed, right? Hey, when the time comes, I have thought about this, right? And this is what's going to work for me, right?
yeah. It's just
So,
so. I mean, obviously you can download my book and read through all that and try to grasp it. But this is the first time I've had the chance to allow someone just to come here, get educated, play around with it. It's probably going to cause more questions than it answers as you're trying to understand it. But that's understandable. This is
yeah,
for a lot of people hearing about it for the first time. It's like, okay, what's important or otherwise, but
I
this can
like
get
it.
your brain going and trying to make it. My goal is always just to try to make it so that you feel more confident one way or the other. If you feel SBP is good for you, great. I just want you to feel that you're not regretting that decision
Sure.
later in life. And that's what I hear so often is people like, I wish I would have known about this sooner or whatever. So I'm
Yep.
hoping this can be a quicker way to start analyzing this and deciding, hey, I want to look for an alternative solution. Let's see if we can get qualified for the war chest strategy.
Sure.
Um, And again, it's just life insurance. It's not as complicated as sometimes people make it out to be. There's a death benefit. You got to qualify for it. If you do qualify and you like the rates and you like the deal, you just got to decide how you want to fund
Right.
it. The
Right.
more you fund it, the better the cash value grows,
Yeah.
right? So, oftentimes we're thinking, oh, I just want to put in about the same amount I was putting into SBP. Well, sure, that'll get you some benefit, but you're making a lot of money after the military. Maybe you don't want to pay
Yeah.
for 30 years, you just want to pay for 10. Well, again, kind of advanced financial strategy. If you want a bigger house, the mortgage payment's going to be a lot higher. You're going to have more of a down payment. So there's options to do that, but not thinking of it as, oh, this is more cost. We want
Right.
to present it to you as, no, I'm building another asset.
Yeah.
SBP is a cost. Typical life insurance is a cost. The war chest is an asset class where you're building equity. Yes, there's a death benefit. There's also a long-term care benefit. So if you get a critical illness, you can use the death benefit as for assisted living type costs or getting help at home.
Got it.
You can't use SBP for that. So multiple potential outcomes, same dollars going in, but maybe instead of over 30 years, you're doing it in 10 years. Or maybe you're putting more in
Sure.
or less. The point is you get to
Well,
choose.
and again, the point is it's a different program. It's less rigid. It's more flexible. You have a lot of
Yeah.
options on this, right? On how you want to structure it, how you want to create your strategy, right? So,
Yeah.
no, it's a nice
Well,
tool,
cool.
Scott. You've done some good work on this, right? I think there's going to be a lot of people that find value from being able to step into it and go through this complicated issue with this tool uh, and the illustrations you provide. This is awesome.
No, great.
Sure.
Yeah, I mean, like all these things, I always know it's a lot, and I always try to simplify it, and less
Yours
is
is a challenging message,
yeah,
but this tool goes a long way in that. I think
right.
in
I know
simplifying.
less is more, but at the same time, this is an important decision, and
Yeah.
it's I want you to have all the information and make the decision for you. That said, I do want feedback on what aspects of it would might be confusing, or we could explain or present in a different way. I've been through this 10 different times already, cleaning it up before getting it to this stage where I feel like, hey, it's at least usable.
Wow.
And so, for anybody watching or that sees this, at least for now, until I get a link set up on the website, shoot me a message on LinkedIn if you'd like to check it out or get on a
Yeah.
call with me to go through it. Even if you've already gotten out of the military, already retired, already a client of ours, we're going to be reaching out to people anyways to get their thoughts. But regardless where you're at, if you'd like to check this out, we'd love to get your thoughts. And yeah, I guess I think that's
No.
enough for now.
Yeah. No. It's a nice tool. You've done some great work here. Super. All right.
Thank God for AI. Yeah, that's
Yeah, it's pretty amazing,
it's
right? Pretty amazing.
right. Just allowed me
Okay.
to do coding without having to go to a developer and just stuff I was never, gonna have the capacity to do. So now I was able to do it all by myself. All
Dude,
by
it's
my
fantastic. I love it. So what's on the horizon, man? What do you have going on here in the coming month as
um
summer approaches, right? We're here.
yeah, right. Yeah. I've just been kind of in groundhog mode. It's like, what, this is what I do. I got my CrossFit. I don't got any travel plans coming up. I'm just I lived in Europe for 11 years. I've been to 50 countries. I've been all over the place.
Yeah.
I did all that stuff. I'm kind of like dialed in now. It's like, all
Yeah.
right, I want to focus on building this out, helping the right people that are looking for this kind of help. And I mean, I think the main thing for us, actually, the main next thing I didn't even show you yet is we're building out a whole new platform for the podcast.
Oh,
Jen's
I remember
working
you
on
mentioned it,
this.
right? Yeah,
Yeah.
but I haven't seen what you're
So
doing.
this is going to be hosted on Substack, and essentially which is a blog format. It's going to look different. You're going to be able to see our videos in
Yeah.
here, but every episode we do
Good morning, sir. How are you? Look at that.
is is going to be right in here. and we'll have it organized based on topic and category. So all of our LinkedIn episodes, you'll have
Wow.
right here. And so, Mike, if you want to start creating more content about how to do resumes, we can have organized that way.
Look at that.
We're going to
Yeah.
set up the digital uniform section to do
Yeah.
group calls for people who want to work on their own, presentation of having that online
Mm,
visibility
I love it.
and networking strategy, and do
That's
our own networking
fantastic.
group in here. So this will be our platform for sharing the content from the podcast and from other resources we've built over
Sure.
the years that people can click through as they're going through the military retirement. Not just about financial stuff. I mean, it always comes down to money, one way or the other. I'm getting a job, or I'm trying to
Yeah.
save more, or get insurance, or whatever it is. But I think we want to and we wanted to consolidate all that onto this platform. We're moving off of our previous platform, which is more of a community-based thing. It's what we'd signed up for years ago, so we tried to kind of make it work, but it was just a lot to manage, and we can issue it or set it up
No, I love it. You
much
guys are
more
making some
efficiently now.
changes, right?
Oh yeah,
It's
so this
awesome.
is that. To
Yeah.
answer your question, this is what we're doing this summer
Nice.
is reorganizing all of this and trying to keep up with all the changes going on in the internet worlds, the internets. There are some major shifts happening, and I think
Sure.
most people are not aware of how quickly this is going to be occurring. It's not just AI.
Yeah.
There's, I mean, that's obviously an underlying component to it, and that might change the job market or not. But it's just over time, people start using the internet differently, use social media differently.
Hmm.
I don't like social media. I don't even like I haven't been on LinkedIn. Like I was on LinkedIn for a while back and made some posts that went a little viral and got a lot of connections and traction from that, and
Yeah.
that's great, and I appreciate those connections. But ever since I started working on the tool, I stopped getting on LinkedIn. It's like I can only do so much, right?
Sure. You
So
only
I
have
don't
so
want
many
to be
people. Yeah.
stuck to just always having to have a new tip on LinkedIn every day or a new insight where we can do it here and actually have a place for people to come down
Good
and
morning,
ask
sir. How are you? I mean,
ask questions in
it's
the comments or
sure.
whatever,
Yeah. I
and then
like
we
it.
can you know have different membership tiers depending on topics or however we want to set it up. So
Sure.
that people can go sign up for this right now, and they'll get updates and a newsletter um anytime a new episode comes out, and that kind of standard stuff. But
I like it. Well
what about
done, sir.
you?
Man. Like I said, it's as we step into summer, right? It's busy, right? We've got cohorts, all the way through scheduled now throughout the end of the year, right? So we're excited. We're going to do our first virtual cohort in the month of August. So, that's for we're going to try it, right? We are big believers in the in-person cohort experience, right? You
Yeah.
and I have had this discussion, but there are individuals, to no fault of their own, Scott, that they'll never be able to make an in-person cohort, right? They're stationed someplace that we just can't get to. It's just a myriad of challenges and hurdles, and they're never going to be able to.
and
So,
you and you can only do so many people in the room, right?
yeah, you can only get so many people in the room too. So we thought we would try a virtual cohort. So Steve Weeman, myself, and probably a couple other members of the team, right? We're going to try this in the month of August, and it's kind of set up where we do it in weekly blocks, and it's about a 3.5 week start to finish kind of thing. Much of our cohort messages are now recorded, so we offer the members an opportunity to go and review the message, right? The recorded message, and they can review all the content, and they can start their week and pick their time on when they want to review all this stuff. And then at the end of the week, each week culminates with a 90-minute online session with all of them and us, and we review the content and the highlights and make sure there's no questions and there's firm understanding. We introduce next week's content, right, message, and then we cut them loose, and then those individuals have a whole week to go through all of that. And so, what would be, and typically is a fire hose absorption, right, for a full day, we kind of spread it out into like 4 modules, right, for the members, and they go through it. And the more we kind of look at this, we actually think there's going to be some pretty good one-on-one time for individuals, right, in this online environment. And like all of our members, even at the end of this cohort experience, whether it's virtual and in person, hey, welcome aboard, right? Welcome to the Blue Water Network, right? I mean, this is an enduring relationship. You've got a question 2 months from today, bring it back to us. We're happy to turn on it, right? You're starting to get into your interviews. You want a refresher, give us a call, right? We've got updated content we can steer you to, or we're happy to have one-on-one conversations, right? That's probably the biggest differentiator. We are not transactional in nature. This is not just, yep, you did this thing, now see you later. Nope, we maintain this network, right? And Blue Water Digital is a big tool online that's a part of that. As you know, we've been putting a lot of effort into that, and we're just getting ready to make some version 2 improvements on that platform as well, too. So we're
Aren't we
excited.
all? No, well, glad to hear you're doing the online version. I know I was pushing for that for a while. So
We're gonna try it. Hopefully, we get some good
I lost your
feedback
audio.
there, and we'll see what success it is.
Is that
So
me?
we're happy. All good. All right, sir. Did I lose you, Scott? You still with us? All right. Sounds like maybe Scott's trying to figure that out. But I think
I
we're
lost
still
audio.
good. I've still got you.
I don't know.
Yeah.
I don't know what happened.
Yeah. Well, I've still got you. All right.
Can you hear me?
So for everybody, thanks for tuning in. We appreciate it. And we'll do it again next week. Most of you guys that are tracking, right? We do them every Wednesday, most Wednesdays, right? And we bring out new topics for everybody to kind of listen into. So in the meantime, stay tuned and we'll have another topic to kind of queue up. So, all right.
All right. I guess we're signing off. Thanks everybody for joining us. We'll see you later.